Hey everyone, and welcome back to another Sunday Scan. If you're joining us for the first time, we do Sunday Scan every single week. I am joined by Stan, who is a fellow moderator in the Investors Underground community where we are from, and that is an active trading community where I would say more, people who take trading professionally. They come together, they trade together in the markets, and we're accompanied by some great technology, and we all kind of work together to trade. So, Stan, welcome back to Sunday Scan. How you been?
All right, thank you, Chris. Thanks for having me on again, and I've been great. Recently moved over to Europe, so that has been my home for the past month or so, and just still adjusting a little bit, taking it day by day. But overall, it's been fantastic, and really excited to be on Sunday Scan this week. We saw some pretty insane action last week that I think it will make for a valuable conversation.
Yeah, definitely. We were chatting a little bit off screen, with the move to Europe, and now, you're basically the shift in hours is you're a lot more exposed to the pre-market hours and everything now. So, I mean, really what a week to be able to see all the action in pre-market and then build. I mean, we've had names like QMMM, we've had OCTO, which now did a ticker change, but really some names that are just incredibly thin. They had some catalysts, and some of them were up 1,000%, 2,000%, 5,000%. So some really interesting moves. And we were also chatting about how, while this seems unusual for it to spill into the stock market and to see moves like this, people who are familiar with other markets, like, you're involved with crypto things as well. So this really isn't that uncommon. It's more just when certain markets start behaving like other markets, it catches a lot of people off guard. So could you chat about, just how some of these moves, they really shouldn't be as surprising as I think they came across to a lot of people?
Yeah, absolutely. So, I mean, I'll start off by, obviously, as you mentioned, we saw Octo, or now I think the ticker name is Orbs, ORBS, and QMMM are essentially the two that stand out from last week. One of them went up however many 1,000%. The other one, I think it was over 5,000% where it topped out. So, just like I have not seen such a percentage gainer in listed stocks, right, in a single day, like many others out there. However, with one thing that I've learned by being exposed to, say, the crypto market, and especially with some of these altcoins that make large percentage gainers, such as 10,000, 20, 30, 50,000 or more percentage gainers over the course of several weeks or several months. One thing that has helped me a lot in handling the surprise factor, if you would, on listed stocks is keeping an open mind. So I have learned to keep an open mind and not let the emotion of surprise overshadow the element of execution. And as a market participant, I believe one of the strongest traits as a trader needs to have or possess is adaptability. Now, given that we don't see a 5,000% mover on listed stocks very often, it makes it tough to practice that adaptability, because in order for you to adapt quickly, you need that experience exposure, right? You need to where, you're seeing these such moves more and more often, to where now you can build a playbook around them. And again, given the rare occurrence of such events, it's difficult to adapt quickly because of the lack of the examples. But having an open mind and removing thoughts such as it cannot go any higher, or this has to be the top, that has allowed me to be more risk adverse and focus on the technical aspect of the chart versus the emotional ties to what is or isn't possible. And as you mentioned, having exposure to other markets, whether it would be Forex. I personally don't trade Forex, but I know some crazy moves happen there as well. Plenty of liquidity in the Forex market. or trading something, say, on the option side, whether you trade, zero DTE or some more aggressive option strategies, there, along with the crypto side, with the altcoins, etc. Overall, it provides for a great exposure to where one can now see what is possible and what could happen, and then keep that in mind as you're trading something that's in front of you. Because oftentimes it's that deer in headlights factor that really gets traders in trouble when something unexpected happens, and moreover, it's the probability of the unknown that should be feared, not necessarily the range. And I think, having as much help as possible and looking at other markets, creating a different playbook, and keeping back on these examples is what will help you, or at least has helped me, become more level-headed and strictly focus on the price action in front of me, versus letting these thoughts of this has to be the top, or it can't go any higher, or I've never seen this before. No one has seen this before, right? On listed stocks. So to me, again, what has been the number one helping factor is just keeping an open mind. When something goes out of the realm of probability or out of the realm of possibility, then I strictly focus on the technical side. And if we go back to review some of the that day one move on Octo, let's say, back when it was Octo, and then they had a ticker change to Orbs. Structurally, it made sense. If we remove the right side of the chart where it shows the price gained or the range that it has gone up, and you strictly have the candles, technically the move made sense. There was a clear resistance, there was a clear support, there was a clear breakout, there was a clear pullback and consolidation. These are technical aspects that we trade every day. The only thing that was different was the range that it went. The range, that has a lot to do with the lack of liquidity, especially when you have something come back and consolidate around the key support area. And then once it blows through that resistance, that tape really thins up. And when it thins up, it just goes to the next level. It halts and then it resumes. And now everyone that was wrong from the trade before, now they're forced to get out. Similarly, if people were short, you have to be cautious when you short a thin name, because every time you short something, every time you short a stock, you simply defer demand for a later time, because the only way that you can close that position is by buying it back. So that is something that I always keep in mind when I trade illiquid names, when I trade thin names. If I'm going to short this, I have to account for the fact that if it's not ready to crack, I'm only adding to the problem, because now I have to defer that demand and then buy that stock back when everyone else is buying back as well. And essentially I compete for covers, and it's not what I want to do as a short seller, or in this particular stock when I was shorting. It's not something that I want to do, but rather wait for the sellers to show up and be part of that as a short seller, versus be part of the outlier demand that's now been deferred.
Yeah, and Nate really had a great couple of posts on X about this issue in like the small cap space, where there's really a lack of supply in a lot of ways. So if you're looking at any kind of stock that's moving, it has to have a supply layer and a demand layer. And when there's a supply issue, so whether it's a really low float or whether there's just no inventory above a certain level, and you have a huge amount of demand come in, whether that's from algos kind of buying it and selling it back and forth, so it looks like it's very liquid, and then you have a bunch of shorts come in, the supply comes from there, and then you have a bunch of people who have been rewarded for chasing longs, so you have more demand come in. So you basically have the supply is coming from the shorts, and then you have algo demand, retail demand, and now you have short demand when they're forced to cover. So really, it's a supply issue in small caps, and that's just, even if you have relatively normal demand, you can have abnormal moves. But if you have abnormal demand, you can have explosive moves like we've seen. So I definitely recommend that people go and check out those tweets to really get some more context about what we're referring to with some of the action over the last week that has been pretty unusual. But again, if you're kind of referencing different markets, if you're thinking about the structure and why it's actually happening, it makes perfect sense. And like Stan said, just focusing on the technicals and having clear black and white, or at least roughly defined risk controls in place. That prevents you from saying, oh, my risk is I've never seen something go this high. So as long as it doesn't break my mental model, that's my risk. That's not going to work in an environment like this if people are participating on the short side. And, there's also been incredible opportunities on the long side. Stan, I know that you had some incredible trades on things like OCTO on the long side, and we've had things like WLDS and some others that have also just been very trappy and offered some great opportunities there. So any thoughts about, what people can look for, or some of the things that might make a long on some of these attractive, and also what are the risks you have to take into account for that?
Yeah, I mean, absolutely. And right, as you mentioned, WLDS, I think if that last week, that ticker was one of the best tickers that actually showcased the algo side in the tape. So if you were recording your screen, which I highly recommend traders to do, to just record your screen every day, and then at the end of the day you can just cut the part that you need and then disregard the rest. But that one, you could really see the algo in action as it was happening, and we did a midday session as well on it, and we were able to discuss that price action live. But then if we want to quickly share the screen, and we can go over the Octo, which is now ORBS essentially chart, but this was the move that it had on 9/8. I believe that was Monday. Yeah, so that was the Monday. It was quite the opening of the week type of price action. It really set the tone for the rest of the week. And that's also something that I keep in mind, right? What happens in the very, very early stages of the week? Because in a way, that does set the tone for what's to follow. And then immediately the following day is when we had QMMM, I believe, as well on Tuesday with that explosive move. But back to Orbs or BS or / Octo, they had a ticker change there. If you simply disregard this price range here, right, or call this $2 and call this $5, something more normal. Don't worry about that it went from sub $1 to, or from $1 to 80. If you simply disregard that price range, now the chart from a technical perspective, it becomes very clear. It becomes something more reasonable, something that has a something that has a key support line, something that has a clear consolidation, and then it has a clear blow through top, and then it sits back, it consolidates more, and then once within that same technical structure on the backside, you have a very clean fell to follow through setup. So even if you were not participating on the long side and were patient enough, there is an opportunity for a fell to follow through setup as well. But for me, essentially, this was a long trade, and then once, like I said, you can see how it contains many of the normal characteristic of a long type of a setup. Once it goes above VWAP and it firms up, it essentially never touched VWAP for the entire day. So even if you use something as fundamental as VWAP, as a short entry trigger, this would have provided, for a safe day because it never triggered. It never touched VWAP again once it broke through it. And then very cleanly, you can see the demand picking up, supported by the volume, and then it goes into this sideways consolidation area between this, 14 and 20 range. And then once it breaks through that previous resistance, it goes parabolic, it exhausts, and then it comes back and essentially consolidates again, which you could find a entry here versus lows. You could find, versus previous bar low, previous bar low, just depends what your strategy is. And similarly, you can see this exhaustion candle right over here. You see it exhaust above previous resistance. It comes back, but it never breaches the underlying momentum trend. This continues to simply serve that trend line, even though it pulled back. So it is, for me, it's more so noticing these technical patterns in front of the chart on a technical structure that allow me to take advantage of the overall move. And again, as we mentioned before, once you have this next level of support created into this 56s area, then you have an opportunity for a fell to follow through setup. Given that we have a support on the 56s area, then we have a resistance around 67. And if you're having trouble following, or if the range really gets into your mindset, a little trick that I've done and have learned from Nate is simply divide this by 10. And if the price is 56, you should divide that by 10. Now it's 560. How likely or how unusual is for something to go from 560 to $6? That's not very unusual at all. It's a normal type of a move. So that's exactly what's happening here. Is if you're having trouble keeping up with the range, simply divide it by 10. So a very clear signal here as well, as far as the fell to follow through setup. We have this 56s basing a support multiple times, respecting and defending it. And then what happens is we have a clear out of that 67s. It touches 70s, and then it slams back down. And then the moment that support breaches, now you have a clear fell to follow through setup with a clear risk and inventory above that now you could risk against. And from there, it essentially unwound until close, and then even after the market, I think it went a little bit lower as well. If we go back on this day right here, essentially it held that 40 to 45 type of a range. But structurally, within this chart, if we forego the numbers and the range and we simply focus on the technical structure, to me, this is not an unusual chart. I've seen these type of charts day in and day out. The only thing that changes is the ticker name and then perhaps the range. But as far as the underlying supply and demand equation, as far as the underlying factors that go into causing such a move, they remain the same. They have to do with liquidity. They have to do with the wrong side. They have to do with demand and supply. And that is something that we see, throughout not just this chart, but again, many tickers, throughout the days. And then you have the other ticker, which was QMMM. This one happened on Tuesday, 9/9, the following day. And oftentimes after a day like ORBS/Octo, then the following day or the following couple of days is where you get that, sea of opportunity. Whether it would be on the long side or short side, because now anyone that missed this ORBS/Octo move will be looking for the next one. And and they know that, right? So they're able to take advantage of the liquidity. They're able to take advantage of what people are anticipating and what they're looking for, and ultimately we see some follow through setups, and for the most part, most of them end up failing, right? They don't necessarily, you don't necessarily get a second day in a row of after a 5,000% move, or you get another 2 to 3 to 4,000% move like that. That is something that's, for me, I would consider a outlier type of price action. And when we are in a market that provides for outlier type of price action, it needs to have a different set of rules. You cannot necessarily perform and continue to function on your day-to-day or regular set of rules, because what's in front of you is not regular. This last week, it's not a week that you see every month, right? It's a rare occurrence, and it's something that, for me at least, it requires a special set of rules that you need to abide by in order to ensure you are able to come back to the market the following day.
Yeah, great thoughts there, Stan. And one of the ways that can help people navigate this too is to ask the question, where have I seen something like this before? In some cases, they've never seen something quite like it, but sometimes there's analogies where even if it didn't go the same percentage amount or something like that, like we had good comparisons from Opto about INKT, which had a similar move, and basically had a huge percentage move up, and then it took until later in the day for that final clear out to really reset the supply demand profile enough for it to actually fade. So a lot of great thoughts there. Let's get into some of our main watches for the week ahead. So I will give the disclaimer now that neither of us are financial advisors, and these are not buy or sell recommendations. Everything we're going to talk about is for educational and informational purposes only. So I'll run through a couple of watches that I have for the next week, and then Stan will get into some of yours. I know that there's some overlap, so we will have a good discussion about some of those names. So one of the things that we saw this past week was this name, BE, that has been on scan for a while as kind of like a top swing name. I'm just going to kind of recap some of the action there, and then it'll also be on watch for the week ahead. But I'm going to talk about kind of trends and then blow-offs and then how those happen. So this was a name that had kind of that episodic pivot or that big catalyst with good reasoning around the Oracle earnings, or I'm sorry, around an Oracle catalyst. This was maybe 2 months ago or so, and this basically had a big AI power agreement with them. And ever since then, that was kind of the change, and is just started a new steady trend higher. And if you were to draw trend lines underneath this, this is a very classic example of just accumulation, people buying it. You can see the volume confirming it. It has a clear catalyst, it has a clear sector, and all those things. And then basically, as Oracle had earnings over this past week, I had this on watch again for kind of a blow-off move into that, as Oracle, as they're doing well and they're mentioning, they have all this money that they're going to be spending, all the infrastructure, and this is a part of that. That was kind of a change of character where you can see now it's having a blow-off move. And even those dips along the way, you can see a big dip and rip candle where it, falls and then just soaks right back up. And that is good for longevity with moves like that. So basically, it's just different stages. You can have the initial stage with the gap up and consolidation. Then you have the normal trend. And now we're in the phase where it goes into that parabolic kind of stage. And that's where it goes into, that 70 range, the 100 range, the moves get bigger. And that's also where, it speeds up. It looks and feels the best from a swing perspective, but that's also that's where it gets more and more vulnerable to one of those big mean reversion trades. So whether this, goes up parabolic to, that 90 level or 100 level or something like that, eventually, as this plays out, if someone's been swinging this, these are the times to start, taking some profits, setting some trailing stops, and kind of switching your mindset from, even though this is working better than ever, as it's working and it becomes more top heavy, it becomes more and more vulnerable to that eventual mean reversion. So a good time to really be locking in, setting those trailing stops, taking off pieces. And then if people still want to participate, you can wait for that mean reversion to happen. And then, if people want to participate again, or if they're, just wanting to participate in this move here, this is a good time, just kind of cash out. And, it's almost like paying yourself a dividend from it too. People get very excited in the market, especially from an investing perspective, when you see a a 5% or maybe even up to a 10% dividend on something like that. But if you have a swing position, let's say someone had $10,000 or $100,000 in here, and it's going up, 10% a day, and then 15%. It's like you can start to cash some of that out and just be paying yourself. And it's a very similar process to receiving, money from that. So, one of the only ways that I know people really screw up big, successful swing trades in markets is by staying for too long, or by, after it's peaked, really, bringing up their average and thinking that it's the same situation as before, and then they end up round tripping it. And you can see that with examples almost like ASTS. This is kind of a classic, case where you have a lot of people who were right for so long on this, and then, it starts to dip and they want to add, and it dips and they want to add. And now suddenly, someone had an average of 20 and they wrote it up to 55. And now their average is at, 55, and now it's at, 39. And they turn this huge, big trade into a big loser by just, not playing a swing like that correctly. So I would caution people that you can still be bullish on something, but pay yourself along the way. And that is a good practice for names like that. Another one, before, not necessarily that it's a main watch for the next week, but I want to compare, THAR and this IPDN. We had that analogy on Scan last week, where you basically have this, massive move up, consolidation, secondary move up there. And usually after that secondary leg, that's when it becomes much more vulnerable to a big, mean reversion and even a round trip with some of the small cap names. So having a template in place and then applying that to another name where you have that big move up, consolidation, secondary leg, and then it becomes vulnerable to that round trip. I think we're going to have a similar situation in something like WLDS. And this is on watch for me. So you basically have that first leg up, you have some consolidation, some trappy action, and we can see, if this decides to have a big secondary leg up, then, I would expect higher. Maybe we get into that 15 to 20 area if everything goes, according to the squeeze plan. And then after that, it would just become incredibly vulnerable to a round trip. Or if it had, kind of a shortened second leg and this was it, then it could also, be vulnerable to that. But I think that $11 level is really that key area. And what I kind of call, it can almost be like a false ceiling. Sometimes it's a real ceiling, and that's something to be aware of too. But sometimes it's a false ceiling. And we've had examples like NUZE in the past, where you basically have this big area that every time it goes into, it stuffs. And it trains shorts that, okay, it blows out into here and you can fade it back, blows out into here, fade it back. And what happens is that people get desensitized to it, and they'll say, every time it tests this level, it fades back. But what happens if it doesn't fade back? What happens if it grinds up? It's now more short crowded than ever, and it starts to base above that 11 level. Everyone who's been using this as a key area to fade it back, they're all upside down. And like we talked about before, it can get incredibly thin. And all those shorts that were using that now are a layer of demand as they cover, because the mental model that they were using for a setup like this has now been proven wrong if it starts to base above 11 and really go. So just kind of a good thing to keep in mind. And so this is like the consolidation period, kind of like we saw with THAR and IPDN before the second leg. So I think that we could have a big second leg in the WLDS trade. And then after that, it would be much more vulnerable to that round trip after all those shorts are blown out. And then we also have the Fed meeting coming up on Wednesday. So it is expected that they will cut by 25 basis points, or, 0.25%. And then, there's going to be some talk of basically maybe 50 basis point cuts in the future, or just more frequent 25% basis point cuts. So that's good to keep in mind. But if for some reason, things don't go as to plan, and Powell is a little bit more hawkish than people expect him to be, then I think gold would be a good mean reversion trade for that. But if he's, pretty dovish, then usually gold would go higher, Bitcoin would go higher, and IWM would go higher, something like that. So that'll also be on watch. And just a few more names to quickly touch on before I hand it off to Stan is Google has had a massive move up. This has been one of the strongest FANG names, other than now you're having like things like Tesla, come up and have a big breakout as well. But Google is still on watch for upside. And the last one that I'll really touch on was this Oracle trade that we had, where massive gap up on earnings, and they had a huge backlog of basically, hundreds of billions of dollars of a backlog that would transfer to revenue and everything. So that, really blew out anyone that was short or bearish on this. And I think some funds might have even gotten liquidated, on a move like this, when a stock that is, hundreds and hundreds of billions of dollars of market cap is going up 40% in a day. That is, very unusual and a sign of the times with this. We had some good trades, after there was news that most of that backlog was from OpenAI. So it's not as reliable as before. So you have all the shorts blown out, you vote a major move, and then you have a counter trend catalyst, and that opens up the door for mean reversion. And we had some put trades there. So, this will still be on watch for the upcoming week to see if this acts as a bottom and it starts to make its legs higher, or if this is, continuing to fail to follow through and we retrace, back. I wouldn't expect a full retrace, but maybe back to the 270s or 280s or an area like that. So, speaking of Tesla, I'll hand it off to Stan now because I know that was one on your watch list. So Stan, take it away. What are you watching for the week? And specifically with Tesla, what are your thoughts with that one?
Yeah, absolutely. So right before I get into Tesla, though, Chris, I just wanted to piggyback on something that you said, at the beginning of your overview there, which was to pay yourself along the way on a nice working swing position. And one of the, I think, the most one of a crucial overseen element is by doing so. By paying yourself along the way, not only are you limiting your risk to the downside or to a reversal, but more so, it becomes easier for the trader to admit when they're wrong, and it becomes easier to actually see when that trade is no longer working. At least that has been the case for me, as far as paying myself along the way provides for a more objective evaluation of, am I still in the same setup that I'm going for, or has this changed? Versus, building a nice average and then adding to it, wrecking your average, and now the price is below, and you get stubborn and whatnot, and you end up round tripping a really nice swing into flat or, most of the times red. So really nice commentary there. So I just wanted to add that little bit piece. But onto Tesla, as far as it's one of my watches for the upcoming week, and we saw a really nice breakout above this 360s or so resistance. And a key thing to note here is the tightening consolidation over a longer period of time, right? So we've had this breakthrough, the 300, it kind of topped off in the middle, 300s there, 350s, 360s, and then it started channeling and going sideways. And as it's going sideways, we can see how it's tightening up the range. It's creating higher lows, it's creating higher highs. And then finally, when it got really tight, it just blew right through it, because all of that momentum is coiled. And once it goes past that ceiling, that's when you have it, uncoil, and it creates for such nice moves higher. For me, Tesla is on watch next week for a couple of options, not necessarily, one way or another. It's more so I'll need to see how we open up on Monday. And then also I'm keeping in mind the eventful week that we have next week with the Fed meeting, et cetera, which will for certain move this one way or another, along with many other market related names. But for me, Tesla is on watch for some sort of a 400 parabolic, and then sit back, maybe a little bit of profit taking, given the nice whatever this is, 20 or so % move so far that we've had, or almost 20% move that we've had from the mid 350s. So as we're getting close to this whole dollar number, 400, the psychological number, we're also coming up on all-time highs as well, which is, I believe, 430s or not so much all-time highs, but we can see the previous resistance where we blew through and went to all-time highs into the 480s, and then we tried to consolidate in this 400 to 430 range, and that's when it fell to essentially go higher. So this is the area of resistance that we're coming up against, and it's lining up with some major events next week. So I wouldn't be surprised if there's a little bit of profit taking if people were building a position from the low 300s or sub 300s, and now they're following along, and as the chart is extending higher, as it's overextending and breaching into this previous resistance with the Fed meeting, with other catalysts, I wouldn't be surprised if we see at least a day or two of some pressure. So if this thing opens up on Monday and it has some sort of a major gap, maybe 400, 405, or 410s, and then it opens and it goes crazy, the moment it shows that weakness, it's something that I will be interested in participating in. Alternatively, if we open up on Mondays relatively flat and then we experience this fast flush out of the gate into some key areas such as the 390s or this consolidation that we've had right before the break here, mid 380s or so, if we experience that aggressive flush out of the gate within the first 2-3 minutes or so, that's also for me a proper long setup with a set risk of the previous low versus, like I said, depending where we dip into, I will be able to make a better plan as far as a risk level. But that is also an option. So I will be prepared for either side. And really, we'll just wait on Monday to see how we open, and then we'll keep Tesla on watch throughout the rest of the week, mainly because of its daily chart, and now that we're coming out of this long base consolidation. One thing that I'm keeping in mind is I will, if I am trading Tesla short, it's going to be more so immediately right or immediately out, because this type of a long consolidation and now we're finally breaking higher. It's not something that I want to get stuck on the wrong side, or even less trying to fight the trend. This is something that I'm into. So Tesla is on watch for next week. The next one that I have on watch is Open, OPEN. Pretty clear move so far. Pretty nice move overall. Just some tremendous volume. This thing has churned, since the beginning of its move here, sub $1. I haven't counted the bars or the actual volume, but if we put it on a weekly chart and just quickly look at these volume bars, we're probably over 30 billion traded, give or take some. So that is massive volume in such short amount of time. Massive relative volume in such a short amount of time. So for me, Open, essentially, I'm not hoping for a single day wonder. I don't think this will be just one bar red and then that's it. The move is done. The market has been created here. There's billions of shares churned out there. So this is probably going to be a more progressive unwind as the hype, as the story slowly gets played out, and then it slowly starts to fizzle off whenever it has that blow off move. I don't looking at Open on a higher time frame, the overall trend is still pretty much intact. Even if you use this intermediary trend right here, we never breached that as we were building higher and higher. So just now, just as of last week, we're seeing this trend finally start to speed up, start to overextend. And now this gets me interested more so stalking it for the blow off move and then sit back. And then once it confirms, maybe we'll see some sort of an unwind. So for me, Open will remain on watch the entire next week. But again, I'm in no rush to build a position on the short side on this thing. More so, I want to see the tape shift. I want to see the price action confirm that. One thing, something that I'm keeping in mind is, just perusing social media and perusing, other news outlets, seeing the CEO retweet of, people buying from this country and people buying from that country and, all of that stuff. So at some point, right, when everyone has bought, who is left to buy? And that's something that I'm waiting for, essentially, when the music stops, right? When it becomes overly crowded one way, versus another. When the boat starts really leaning one side, that's when the skewed opportunities arise. So open will be on watch for ideally some sort of parabolic move. Yes, we had a nice sell day, a nice pressure day on Friday, but to me, it was extremely well controlled. We had some, abrupt moments of fast decline, and then followed by same story, just a pretty thinned up tape. It goes back up and then provides the liquidity for the next leg lower. So overall, this to me on Friday was a really controlled move on the way lower. It appears calculated. It appears accounted for. That's why I don't necessarily think that the story is over yet, but more so, we're probably getting into the beginning stages of the end, as they say, given the chart, given the overextension, not just on a smaller time frame, but also on a higher time frame. And we're seeing the volume slowly increase. So open is on watch for the remainder of next week. The next name that I have on watch is BMNR. This is more so for me. I categorize it as the backside bounce type of a trade. We saw a nice little lift off the low 40s, high 30s, and here we are coming into mid 50s. And as we can see, there's a little bit of resistance right here, and not as far as range wise, it's a little bit, but that's where the majority of our volume is sitting right now. So that's what I'm waiting for. Whether it's going to be Monday or Tuesday, who knows? But ideally, we see some sort of a gap up and go type of a day, go into the 60s, 70s, blow through, and then once we sit back, retest, that's when I'm interested for the short side. Again, keeping in mind the higher time frame, you can clearly see the steady trend. And now, similar to open, we're starting to overextend, starting to lift off that steady trend, and that's what gets it on my radar. Is it going to be Monday or Tuesday or Wednesday? I'm not sure. Maybe it's not even next week. It's just more so of a technical structure that I'm looking for. And then the next few that I have on watch are part of the quantum basket. Here we are again. We have RGTI, we have IONQ, we have QUBT, QBTS, and given IONQ for me so far, I think it's again more so the leader of the sector of at least of those several names, and then we also have RGTI as a close second. You can see the chart, you can see where we're coming up. We're coming up on previous highs. Back from CES when Jensen made the comments, and that's kind of what killed it. So it's been consolidating for the entire year so far, pretty much. And here we are breaking out of that consolidation, breaking out of that base on a higher time frame. You see the steady trend, and now we're starting to speed up as well. So given that we have an important week next week with the Fed as a catalyst on Wednesday. Again, a lot of these charts that have been breaking out, that have continued to go higher and higher. There's a possibility that there could be some profit taking. There could be some sort of a pressure that comes out. And again, I think it's important to just keep an open mind, not aim to be first, but more so aim to be correct when there is a set risk exposure. So RGTI, IONQ / the rest of the quantum basket is on watch for some sort of an exhaustion move, some sort of a speed up, where the tape lights up, where the volume comes in, it blows through some level, or it really overextends, and then I will be looking to play or trade for a mean reversion type of a setup. And the last one that I have on watch is this AIRE, AIRE. So nothing too crazy. I'm just looking at more so on a higher time frame on a daily. This is, the 220s is sort of where we broke down last time. And given the overextension that we're seeing on the daily chart, it's just putting it up on my radar. One thing I'm keeping in mind is this, 700 or so. Let me see what's the volume on here. About 790 million shares traded, sub $1. So that, that gives me a little bit pause. It gives me, a little bit more caution, because that, again, as we spoke earlier, some of the demand is deferred demand for later. And I want to make sure that I'm not necessarily the first to the table, but more so come in after an appropriate exhaustion move and then a fill to follow through. So ARE is on watch for some sort of a blow off top, maybe get into the 220s, and then look for a mean reversion trade on it as well. And that's pretty much it. The watches that I have for next week.
Well, great. A ton of really good thoughts there. A ton of really good watches for people to take notes on and to, potentially add to their own watch list. And again, this is part of the process that we're doing every day in Investors Underground. We're scanning the market. We're seeing what setups make sense. If they fall into something, that we understand and that we're able to trade, then we share that with other people. And that's really, the community coming together to, trade the market to the best of everyone's ability, because we all have strengths in different areas. And so being able to combine that is a huge help. So Stan, thank you so much for joining us on Sunday Scan. I hope that you have a great week, and I hope that everyone out there has a great week. Like, share, subscribe, comment, and we'll see you in IU in the week ahead.
Absolutely. Thank you, Chris, and everyone have a great weekend.
Thank you, everyone, for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.